Welcome to another follow-up video on my trading strategy. In the previous video, we went through the whole trading strategy, and as part of that video, we use support, resistance, and points of interest. So I will make this short video, it'll be very short, but this is just going to show you how I define and how I interpret support, resistance, and points of interest. So as you can see here, we've got the UJ open. We've got 2024 on screen. We are on the 4-hour time frame. So first off, what do I define as points of interest? As you can see here in this area, the market, there was no other bounce. I know it kind of slightly came down here, but if you look here, the market just went all the way up. So this to me is a point of interest. So I'm going to zoom in. And as you can see here, the market just took off, never came back down, never retested, just took off. So this is a point of interest for me. So what I would do is I would take my line tool and I would just draw a horizontal line there. And that's my point of interest. And we'll go back to the 2024. I like to just look at the year to date. We're in August now, so we've got a good amount of data here. So another point of interest is down here. As you can see, the market shot off. There was no retest of any support and resistance. The market just took off and went to the moon from this area. So this is a point of interest, a POI. So again, I'm going to take my line tool. I'm just going to select the bottom of the tail and draw that line there. So now you can see in orange, I have got two POIs. When we get to this area, this is what my strategy is. I start looking for engulfing candles, or I start looking for big tails. If it was resistance area, point of interest where the market dropped off the edge of a cliff, I would have POIs there also. So let's look for some support zones on here. So a support zone for me is an area that's hit on several different occasions. As you can see here, this area here, we bounced, went up, and it's the same here. So I would get my box tool, and I would draw a box here. I would try and get it to the bottom of the furthest wick. And this for me is a support zone. It's been created here and it's bounced off here. If we even drag this further back, you can see this acted as a resistance zone here before we broke through it, came back down, acts as support. And you'll see this time and time again through trading. I also mentioned in my strategy video, I feel it's very, very important. One of the most important rules in trading for me is stick with the one time frame. Master a time frame. Mine is the 4-hour. I do not look at any other time frame at all. The only thing I want my brain to see is the 4-hour, and then you become a master of it. You get a real feel for the market. You actually can predict. You can't explain it. You can't put it into words. Sometimes when I'm trading, my setup happens. I've got a long tail. I've got an engulfing candle. Everything's ticked off for me to enter the trade, and I don't enter it just because I've got a feeling that I can't explain. And that feeling is because I've mastered the 4-hour time frame. It's just you can't put it into words. And I've seen it happen time and time again. I've not took the trade and it goes against me and I was right not to take it. Sometimes I don't take the trade and it would have been a profitable trade, but you need to listen to your gut. You need to listen to your gut. The only way you're going to get that experience is by sticking to the one time frame. If you're going for the 4-hour to the 15-minute to the 5-minute, your brain's just all over the place and you're just never going to master a time frame. Also, the 4-hour, I say, is the 6-10-2. So a candle prints 6 o'clock, 10 o'clock, 2 o'clock. So that's 6 a.m., 10 a.m., 2 p.m., 6 p.m. at night, 10 p.m. at night, and 2 a.m. in the morning. It's a really good time frame because even if you're working, a lot of people watching this video may be working, new to trading, want to make a passive income, want to make a success of trading, and you can't exactly sit and watch 5-minute candles, 15-minute candles if you're working a 9 to 5. I mean, if you're working a 9 to 5, you can trade the 4-hour time frame. You just need to check in twice. You just need to check in twice. 10 a.m. is the only candle you need to look at, and 2 p.m. Everything else is out of working hours. So it's a really good time frame for those who are looking to trade but are currently working a 9 to 5. So that's us done our points of interest. Points of interest here, here, and here's a support level. And what we're going to look for at these levels is we're going to look for big tails on the candles appearing. So we'll just zoom in and go over the strategy again. So if we come up and we'll go to AUD JPY, as you can see, we've come down here to a support level. Support level was created over here, over here. You can see how many times this area has been respected. So we start paying attention at this area. As you can see, it goes right through. A lot of people will tell you to enter here as soon as it hits support and place your stop loss, whatever. It's just when there's a liquidity sweep half the times, so it's not a good strategy. It's not a profitable strategy. What we're doing is we're looking for added confluence. So we're getting to this support zone. As you can see, we've had a big tail appear here on the candle. That alone is an entry signal. So I entered the trade. As you can see, I entered right here. And also there is an engulfing candle. So you don't need both. You only need one. And obviously your intuition, your feel for the market. So we had a big tail appear here, and we had this engulfing candle here. Anyone who doesn't know what an engulfing candle is, if you're new to this, the white candle here, you can see it's engulfed the previous two black candles, which are the bearish candle. So the bullish candle engulfs the previous two candles. And think of this candle and this candle is 8 hours. So this one 4-hour candle is just eating up the last two 4-hour candles. So in 4 hours, we've eaten up 8 hours. So you can enter here also on the engulfing candle, and it would have still been a profitable trade. But we've entered here on the big tail here. So how do we determine our exit? Very easy. So we go to the high point, which is up here, and the low point, which is down here. We take our Fibonacci tool, we drag it from high to low, and as you can see, that's the 0.5. It always retraces back to 50%, and that's where we would exit this trade. There's one thing you need to look out for, and you may have previous resistance or something in this zone before you get to 0.5, so you just need to pay attention at that zone. Our stop loss is very simple. It goes just below the tail. Or if this was a resistance zone and it were shorting the market, it would be just above the wick, the last big wick. So that's our strategy there in a nutshell. I'll just delete. I'll show you the settings here we've got for our Fibonacci. Very simple. We've got 0 set as white and 0.5 set as green. And the 0.5 is basically halfway between your high and your low. When you first do your Fibonacci tool, you've got a lot of noise, 0.382, 0.16 and all that garbage. We just keep it simple, 0 and 0.5. So let's look at another example. USD CHF, you can see here, my support was up here, and we've got these orange lines representing points of interest. You can see the market shot away here, and shot away up here. No retouch, no retest, never created support, just points of interest. So we start paying attention when we get close to one of these zones. So we got close to the zone here. As you can see, the bearish candles go right through the point of interest, and we are thinking it may come down to this area, but we do get a wick here. Because the wick wasn't to our liking, we kind of waited until we had this candle here. And as you can see here, my criteria isn't even met here. I don't have a huge wick. I don't have an engulfing candle, almost, but we had a feel for the 4-hour time frame and we knew to enter. We entered and it's a profitable trade, almost to the target. So let's come down and check another example here. So this is just a little screenshot we've wrote out. Entry on close of the big tail on the 4H hour. Stop loss on the bottom of the tail. The big tail wick is a rejection, and it must be close to support or resistance, or a point of interest. And then our target is the mean reversion 50% from the last high. Be mindful of a resistance area. Now this is a good example here because you can see that my take profit at the 50% of the mean reversion here comes after this area here, which was a previous support. So this previous support may become resistance and the market may bounce at this zone. So what you'll see all too often is the market will come up, retest this zone, and then drop off. So this area here that was previous support has now become resistance. We see it all too often. So I would pull my take profit down to below. I would actually close this trade out now because I've been so close to it. I would have probably closed it in this area here. So that's our trading strategy in a nutshell. That's how we draw our support and resistance areas. That's how we draw our points of interest. Once we reach these areas, we start paying attention. We look for a big tail on support, on a big wick on resistance, or at a point of interest, which is these orange lines. The stop loss will go below, and the take profit will go to the 50% of our Fibonacci. Always doing this. I would not enter the trade if it wasn't at least a 1-to-1. That's just a rule that if you're depending on what account you're trading, but size of account you're trading, but you're not going to risk $1,000 to win 500. It would always be a 1-to-1 at least. So thank you for watching this video. This is the trading strategy that I have been using for quite some time now, and I found it to be very profitable. And also you can see here, it presents lots of opportunities. All these trades here, you can see, have all been taken in the last, this one here was August the 5th. We are now on August 11th. So they've all been taken in the last week or two. Typically, a trade for me takes, I would say, anywhere between 2 days and probably the longest I've had kind of 3 weeks. But you're probably averaging about 5 days, about a week's trading. You're looking to be in the trade. So thank you for watching this video. If you've got any comments, any questions, leave a comment in the comments below. Thank you for watching, and until the next time, stay safe.